Hello and welcome to Options Guide TV. My name is Brian Overby. I'm the author of The Options Playbook, and I'm going to be your host here for about the next 20 minutes. We're going to have a short and sweet Options Guide TV. Hopefully, it's sweet at least on this Juneteenth market holiday. I hope you're enjoying the holiday, a nice Wednesday holiday, which we don't get that often in the market. As a matter of fact, I don't think we get it at all. I don't think we have any days where the market's completely closed on a Wednesday. So, with that said, we're going to look at the trade that we put on Friday's Options Guide TV. And I promised you on Monday's show that we would review it because we had a June 18th expiration, which is a Tuesday, because the markets are closed on Wednesday. So that expiration date wasn't even available in the IWM or the Russell 2000 ETF that we decided to trade in. So the trade was successful, but a little bit uneventful. So I'll do a real quick review of that trade. And then to kind of continue with the education theme on Memorial Day weekend, that Monday of Memorial Day weekend, we looked at our NVIDIA position from the very beginning of it, all the way back in October of last year, until that time frame. And since that time, we actually had a 10-for-1 stock split in NVIDIA. I'm sure you've probably heard about that. And we're going to just look at where our position is now inside our portfolio of deep in the money call options. So very surprised to see, well, not surprised that the market went up. The path of least resistance in my mind would have probably been to the downside, because we've had just the hype over NVIDIA and how far away we are from the 200-day moving average. Eventually, we got to have a little bit of a drawdown so that hopefully the stock continue on up. Long-term would be bullish on NVIDIA. Short-term nervous would be a great way to explain my outlook on NVIDIA. So we're going to look at that position and talk a little bit about that. But to start with, let's start by going to optionsplaybook.com. And let's zoom out. I have the back spread with puts that we put on the show. So here we see the optionsplaybook.com back spread with puts. You can always just search for that strategy. We added a search box recently on optionsplaybook.com to make it very simple. Also added a tab that just says option strategies with the drop down and all the sliders for them. So it made it a little bit easier to find a specific strategy. But if we actually hit the animation here, it's showing, well, when we put our trade on, the market was right about here. This is where the IWM was at. And we sold a put and then bought two puts. So we took the proceeds from the sale of a put and used it to buy two puts. And the goal here is to be able to do it for a net credit to the account. When I'm looking at doing back spreads, very rarely would I want to do them for a net debit, but you obviously can. Some people will call it a pay later put, in that if you put it on for even or a small net debit and the market kind of goes down, you would pay later. And you can see that in the profit and loss graph here, because if the market came down and just sat right on your strike here, on the two puts that you bought, if it sat right here on strike A, well, you'll be paying later for the puts that you bought now, basically. And then your whole goal here is to get a movement, and I'm going to start the graphic right away, because right away you don't have a lot of risk on the trade. So time is your friend. So if you want to get back spreads done for a net credit to the account, you need to go closer to the expiration date, because you'd like to have time. And the marketplace knows that. So if I could go out 2 weeks in time and do this IWM trade right at the money, I would almost want to do it each and every week, even though right now we were looking at a chart and we kind of liked what the chart was saying to us. But we couldn't. We only went 3 days. We might have went 4 days, but we had the market holiday, so we couldn't do the Wednesday expiration, the 19th. So we are now looking at closing out the trades. So we had a little bit of a movement to the downside. We were hoping we got a little bit of a breakout, but we really didn't. We just went down a little bit, peaked our nose below the support level and then came back up in the IWM trade. And so now we just need to either let it expire worthless if we want to, or close out the trade. So let's zoom back out and let me run over to uh, the Tradier Pro software. So we now are calling everything Tradier Pro at Tradier. It's no longer the TradeHawk software, which it used to be, and it's still the very same look and feel. Shirt up the platform a little bit more, made it a little bit quicker, made things work a little bit better. And now, when you do the download, it says Tradier Pro as opposed to TradeHawk software. So let's show the Tradier Pro, and we'll look at IWM. IWM is now trading at 281. I already have the trade set up because it's going to be a short and sweet discussion about it. The market, the software highlights. Well, here's first of all the expiration: 0 days. You got half a day to trade. Looking over here, showing you that it's the 18th. The market was at 199. Well, actually below 199 when we put the trade on. It was just below. We sold that option contract, bought two of the 197s, hoping that the market would go to somewhere around 195. We had a slow movement down on Monday to 197. And oh, by the way, you're watching this on a Wednesday, but we're taping on a Tuesday. So the markets are still open. Probably should have emphasized that. On Wednesdays, the markets are not. So we're giving you this little bonus holiday video about this trade. But on Monday, the market was at a scary point. It was right at 197, and it didn't look like it really wanted to move. And then the market rallied back and came back towards the 200 level. And in hindsight, that's a good thing, right? Because if we weren't going to get to move to the downside, at least come back and let our options expire worthless. We put the trade on for a net credit of 5 cents to the account. And if you look at it right now, this is what the trade was. We sold the 199 strike June 18th. Expiration, bought two of the 197 strike, same expiration, did it for a net credit to the account of 5 cents. Now, if you look at it, these option contracts aren't trading for much. The 199 is our risk. That's the one that we sold, and that's 4 cents by 5 cents. And the 197s are basically worthless. If you put this order in, you could close it at for a 4 cent net credit and not have to worry about the trade today. Go on with your midweek holiday and take half the day off and be done with your trade. If you were hanging around though and wanted to see if it would expire worthless, it's all about, do you want to try to save a nickel? And I really wouldn't at this point in time. I would probably just close it out and call it a break even trade. And that was a possibility. The chart was interesting, and I guess we can run to the charts. I haven't really got the charting up and running to where I exactly like it to be. Let me see if I can zoom in. Yeah, it's very similar to the software. Okay, and we had the support level over here. And what we did, we had the market come all the way down below our support level that we had drawn out. Can't move it over that way. Okay. Below that, let's do this. Here's what I'm trying to do. This is what I need to do. There we go. And we came down below that support level and we stuck our toe in the water, if you will, kind of hoping that we'd get a breakdown towards the bottom end of the channel, towards the 200-day moving average. Didn't happen. We popped back up and we're at this range, and now we're out of the trade. Okay. So that's really all that I had on the paper trade positions that we had on. We put this on Friday. I really did like the trade, and I don't, a break even trade is not a loser. It's not that it was a bad trade. I think the setup was there, the timing was right, and we were able to get it done for a small net credit. So it was an interesting back spread that we did with put options, and I would try it again. You just have to have a nice setup situation in the chart, and I don't mind doing that in IWM. We also looked at a long straddle. If you want to learn more about that long straddle, go back and look at Monday's show. All right, because that one's just going to ride. We got 10 more. Well, now we got 9 more days remaining until that expiration date. So we're going to let that one ride for a little bit. And let's look at our NVIDIA position. So in the paper trading application of the TradeHawk software, which is now the Tradier Pro software, is it the split did not it did not reconcile in that we had a 700 strike 700 strike call option. And I think we're going to bet, let's zoom out a little bit here. Let's go to the full screen, and we're going to actually look at a couple of things with the NVIDIA trade that we did. So we had two 700 strike call options. After the 10-for-1 split, that means we're going to have 20 call options, and they're going to be 70 strike, and the price is going to go down. But it didn't go down much because NVIDIA really went up strong. And because of the way the dynamics of the options marketplace and the delta of the position that we were at, we had a better move in the option contracts than we would have if we had just bought the stock outright. We just had a very strong move to the upside, and on a percentage basis, because of the leverage, we did very well on that position. So let me switch out here, and we're going to look at one second here. All right, so let's run to the playbook one last time. And this is buying leap options as a stock substitute. So in this section of the playbook, we talk about using deep in the money option contracts as a substitute for a stock on expensive stocks. NVIDIA was a real expensive stock, and now it's less expensive. It was over $1,000 when it did its split, and now we're looking at $136 stock. And we also looked at a bunch of, we had Eli Lilly, which was a fairly expensive stock, Home Depot, Caterpillar. These are some of the stocks that we bought leap options as a substitute for the stock. And so now I'm going to tab over once again, and I think we'll be okay. Let me go and look at this position. All right, let's pop back out. Let's pop back out real quick. Okay. And here is a PowerPoint that I had put together. Give me a couple of seconds here. And this is, so on Memorial Day, on that date, we actually, Memorial Day was episode 133, and that was on 5/27/24. So if you want to go through this position, I thought it was a great learning experience. So let's jump back out and let's look at the PowerPoint that I have made now. And this is where it started. And this is what we went through on Memorial Day. We started with our deep in the money call. The initial purchase was in October. And I'm going to scroll really fast, went through all the numbers on all the positions. And now we ended up with a new position. And this is where we ended the PowerPoint on that day. We were long 2 NVIDIA, June 20th, 2025 calls, 700 strike calls. They were trading for $321. We had rolled into that position, took some money off the table. We went from a delta of 1 all the way back to a delta of 80. There was 450 days remaining to expiration. Like I said, we're long-term bullish in NVIDIA. So we rolled up in strike, went to an 80 delta from a delta of 1, and we went out further in time to 450 days. Market value was $64,200. It was 19% of the portfolio of the monies that we had in the paper trading portfolio. So we took off some profit, 41,000 in general, plus any additional proceeds from the sale of the call. Well, in this instance, after the 10-for-1 split, we now have 20 contracts. So we went from 2 to 20. The strike price went from 700 down to 70. So just divide that by 10. And they're now trading for $69.50. So the market NVIDIA went up about 25-30% since the stock split. The days to expiration obviously went down from 450 down to 367, but the delta is now at 93. And the portfolio percentage is very high relative. So we're going to have to adjust this position here shortly. We have the market value is now 139,000. So that's what you would add to this position. And that's where we're at on just this one position in NVIDIA. If the delta gets to 1, the golden rule is we want to roll up and out, or we want to sell and take off some of these positions. And the fact now that we have a 20 lot as opposed to a 2 lot of the option contracts, maybe we'll sell a few of them. Maybe we can sell off a little. We could have sold 1 up here, so we could sell 10 down here, and that would be relative. Also would want to roll. So I still, if we're getting close to a delta of 1, the strategy is to keep the delta around 80. There's benefits to it. We talked about it on the Memorial Day show, the benefits of why you stick around 80. And the downsides, you still have some time premium. But if the market goes down, well, bottom line is it's a way to take some risk off the table by taking some capital off the table. Now, on a recent show, and I don't exactly remember the show, I went in on NVIDIA and we sold a call option on that position. And I guess I could, maybe we jump back out one more second here. Let's go and look at that position real quick, like. Okay, so I'm going to bring this down, get rid of a few things. And I'm going to pull up that position that I just took a real quick screen grab of the trade prior to this. All right, so I think we're looking all right. Let's do it. Let's go back to my screen. Okay, so in this position, this was a screen grab of the paper trading portfolio. So a few days ago, we actually sold an NVIDIA 134 call. We only sold a few of them. And so we could get pegged on that position. The market's at 133. We have 3 days remaining to expiration. So I wouldn't want to do anything until it got to 134. But if it got to 134, I'd probably roll out another week to try to avoid getting assigned on these couple of option contracts. We only had a few of them. We sold them after the split, but we were pegged a little bit because this position didn't get adjusted because of the split. So I did the adjustment here in the PowerPoint to kind of show where that portfolio was at. At that point in time, it was up 51,000. Now it's up 100, and the market value went to 139,000. Now that's just on that position after the position got rolled. Now this is what the new position looks like, and this is where we're at. We have these 2 short calls. They're in danger of being assigned. We want to make sure that we don't get assigned on them. And that's where our position was. This is where we're at. Here's the expiration date, June 20th, 2025, 367 days remaining to expiration. And that's where we're at. And delta is 93. And if you go over and you look at these in the position delta, and I'll show you, well, I guess I can't show you this in that portfolio. But if you look at the position or the delta for that option contract, it will show you where that delta is at. So I'm going to I don't need to move. Let's stay right here and let's look at the NVIDIA trade. And we'll go all the way out to that expiration date, which is 367 days away. Jump down to the 70 strike call option. And here we are now. We're actually up a little bit more, 134. So we probably got to roll those calls today. Make sure they don't get assigned. So the market's just still so strong, up to 2.3% today already. And the delta's at 93.37. So I'd probably stay in the same expiration and we would sell this, take some money off the table, at least on 10 of them, if not the whole position. And our goal would be to roll all the way up to an 80 delta, which would be the 103 strike. Well, actually, want to be exactly on the 80, and I do like that there's a lot of open interest here. You're looking at the 104 strike call option, so you would be taking, you'd be selling it. Let's call it 45. Let's call this 70. So you're looking at 35 points that you would be taking off by doing that roll. Still have a lot of stock representation. You wouldn't make this as massive a part of your portfolio where all your risk is just Nvidia, and that would be the roll. That's how I would adapt this position, and I will continue to do this. We'll look at it. I'm going to give it a few more days. We're going to roll the 134 strike call option, give it a week. Hopefully it will stay below on that roll, and then we'll come back and we'll look at this position. Huge open interest. And if it continues on up, you see how high it's got to go to get to the delta of 1. So we still got another 10 points of movement before we really start getting to the point where we want to roll this position for sure. And yeah, that's it. Well, happy Juneteenth, everybody. That's going to be it for this holiday edition of Options Guy TV. We will be back Friday at 11 a.m. Eastern time, as always, for the next edition of Options Guy TV inside the Tradier Hub on X.com, also on the Tradier YouTube. Check them all out, and check me out on X.com. My handle is @BrianOverby. Thanks for stopping in.
All opinions expressed by Tradier Hub contributors are solely the contributors' opinions and do not reflect the opinions of Tradier nor its affiliates and/or subsidiaries. You should not treat any opinion expressed by Hub contributors as a specific inducement to make a particular investment or to follow a particular strategy, but only as an expression of their opinion. The contributors' opinions are based on their own personal research, but neither Tradier nor its affiliates and/or subsidiaries warrants its completeness or accuracy, and it should not be relied upon as such. Any trades or positions discussed or referred to by contributors may or may not be actual live trades or positions. Such information is not intended to be financial or investment advice. Tradier Inc. is the parent company of Tradier Brokerage Inc. Tradier Brokerage Inc. and Tradier Inc. are separate entities with their own products and services. Securities products and services are offered through Tradier Brokerage Inc. Tradier Brokerage Inc. is an independent subsidiary of Tradier Inc., all rights reserved, member FINRA